Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week: Goldman Sachs Asset Management has made waves in the financial world, raising over 20 billion for senior direct lending through its latest fund. The fund, known as the West Street Loan Partners 5, it's geared towards supporting private equity-backed global businesses. It has already allocated 4 billion across 37 portfolio companies. Direct lending, a crucial component of private equity, has seen a surge in popularity due to fewer regulatory obstacles compared to traditional lending institutions. Goldman Sachs has ambitious plans to expand its private equity portfolio to 300 billion within 5 years, up from the current 130 billion. The latest fund, part of Goldman Sachs' alternative flagship large cap senior lending series, secured 13.1 billion in equity capital and additional funding, including commitments from Goldman Sachs' own balance sheet. Alongside this, the firm secured 550 million in co-investment vehicles and 7 billion in large cap senior direct lending managed accounts. Managed by Goldman Sachs' alternative private credit division, the fund attracted investment from both existing and new investors, as well as commitments from Goldman Sachs and its own employees. Also on Follow the Money this week, Trian Fund Management waves goodbye to Disney. Nelson Peltz, the head of the hedge fund Trian Fund Management, has made headlines by selling his entire stake in Walt Disney Co. According to a report by CNBC, Peltz offloaded his Disney shares at a reported price of $120 per share, raking in an impressive $1 billion on the transaction. It's worth noting that Disney's current share price is hovering around $100, marking a decline of nearly 9% over the last 3 months. This move comes off the heels of a high-profile proxy battle we covered back in April, where Peltz and Trian aimed to secure 2 seats on Disney's board. Their proposed candidates include Peltz himself and Jay Roslow, Disney's former CFO. However, with the support of Vanguard, shareholders ultimately voted decisively to re-elect the existing 12-member board, effectively blocking Peltz and Trian's bid for representation. This move marks a significant development in the ongoing dynamics between activist investors and corporate governance, shaping the trajectory of major companies like Disney. That's all for Follow the Money this week. Thank you for joining us. Join us again next week on the latest updates in the world of money. Back over to the studio for Trade of the Day.